Hello and welcome to another video from the Trader Guy. This is being recorded and taking place during the October 17th Monday Forex session. And over the weekend we had basically the G20 going on about how the Europeans needed to do something is basically what they said, and they pretty much expect them to do it this week. Of course, the German finance minister came out and said, no, I wouldn't expect anything by the end of this week, and the euro has suffered. But looking at it from a technical point of view, you can see that I have the Fibonacci levels drawn out. And we were at the 50% retrace at the end of the week, at the end of this very parabolic move. And in the big scheme of things, we are still in a downtrend without a doubt. I mean, there's really no two ways around it. So to expect a reaction here really wasn't a real stretch. And as you can see, that is exactly what we got. It does look like the next 100 pips or so are going to be pretty important. You know, whether or not we can bust back through this gap. These gaps do tend to cause reactions over time. The 38, it's not uncommon to see the 50 and the 38 kind of ping back and forth. But if the 38 breaks down, we could see down to the 135. In the big picture, we think that the 135 is probably going to be significant support, but over the long term, what do we still have here? Looking at it from a weekly time frame, you can see that that is the bottom of a hammer. It is a major area. But the fact that we haven't made it to 140, which was also the 61, I should point out, is significant. So we'll have to see what happens. The Americans tend to like to sell off the dollar, and we are heading into the afternoon of the session, so this could reverse. By the time you watch this a few hours later, it could be completely for naught. But I did find it interesting that this has all happened. Another chart that's really kind of piqued my interest is the dollar CAD, or the CAD yen, excuse me. And I'm going to go ahead and see what we've got Fibonacci wise, because to be honest with you, I haven't even looked at it yet. So, look at that. It does line up well. The 38 is at the 77 mark, and you can see it was definitely former support, so now it's resistance. We're definitely in a downtrend, and this is definitely a risk-off proposition. The thing is the yen is a safety haven play, so we got the yen as safety, and we got the CAD, um, which is risk, and the main reason being is probably the oil play more than anything else. So it makes sense that oil markets getting a little bit soft. This is starting to sell off. It kind of becomes a perpetuating situation. Now, the real question in this is going to be whether or not the 75, I have 75.08, but let's just call it 75, gives way. If the 75 handle gives way, then we more than likely will test the lows again. So it definitely seems that the risk-off trade is on, and now that the Americans are picking up the ball, the European indices all fell. We'll have to wait and see what happens, but for now, it definitely looks like risk off is in the cards and going to be the way to go.